Imagine waking up one day and seeing that the $10,000 you invested years ago has quietly grown into $100,000. It sounds like a fantasy, but for many long-term investors, this has been reality. Not because they found a secret stock or got lucky, but because they understood how time, discipline, and compound growth work together. The biggest misconception in investing is that you need to be rich to build wealth. In reality, many people who eventually reach six-figure portfolios start with a relatively modest amount and follow a strategy that avoids emotional decisions. If you're wondering how a single $10,000 investment could eventually become $100,000, this video will show you the mindset and strategy that have helped countless Americans build long-term wealth. The first thing to understand is that your money doesn't grow in a straight line. It grows through compounding, which means your investment earns returns, and then those returns begin earning returns of their own. Think of it as a snowball rolling downhill. At first, the growth seems slow, but as the snowball gets larger, it picks up more snow and accelerates. Historically, the U.S. stock market has delivered average annual returns of around 10% before inflation over very long periods, although yearly results can vary significantly. That's why experienced investors focus less on what happens this month or even this year, and more on where their portfolio could be 10, 20, or even 30 years from now. Instead of chasing the latest hot stock or trying to predict the next market crash, many successful investors simply buy diversified index funds that track the broader market. Funds linked to the S&P 500 have historically rewarded patient investors over long periods because they spread risk across hundreds of America's largest companies. This approach removes much of the guesswork and allows your investment to grow alongside the overall economy rather than depending on the success of a single business. Another powerful strategy is continuing to invest after that initial $10,000. Even modest monthly contributions can dramatically accelerate your progress. Every additional investment purchases more shares, especially during market declines when prices are lower. Ironically, the periods that scare many investors are often the times when long-term investors are quietly buying more. Market downturns have historically been temporary, but selling in fear can permanently lock in losses and interrupt the compounding process. Taxes also play a major role in building wealth. Many Americans take advantage of tax-advantaged accounts like a 401k, a Roth IRA, or a traditional IRA to help their investments grow more efficiently. Depending on your situation, these accounts may reduce current taxes or allow qualified withdrawals to be tax-free in retirement. Keeping more of your investment gains instead of losing them to unnecessary taxes can make a meaningful difference over decades. Patience is perhaps the most underrated investment skill. Social media often promotes overnight success stories, but sustainable wealth is usually built quietly over many years. The investors who ultimately reach six-figure portfolios are often the ones who ignored daily headlines, stayed invested during periods of uncertainty, and trusted their long-term plan. They understood that volatility is a normal part of investing, not a signal that the strategy has failed. Of course, no investment is guaranteed, and every investment carries risk. Stock prices can rise and fall, economic conditions change, and future returns will never exactly match the past. That's why diversification, consistent investing, and maintaining a long-term perspective remain some of the most reliable principles in personal finance. The goal isn't to get rich quickly, it's to build wealth steadily while avoiding costly emotional decisions. Gleeful cackling. So, can $10,000 become $100,000? Absolutely, but it usually happens through years of disciplined investing, consistent contributions, intelligent diversification, and the incredible power of compound growth rather than shortcuts or speculation. The earlier you start, the more time your money has to work for you. Your future financial freedom won't be determined by one perfect investment, but by the habits you build today. If you stay patient, keep learning, and allow time to do the heavy lifting, that first $10,000 could become the foundation of a much larger financial future.